Welcome to our October edition of GlobalView. For those of you who are new to FrontierView, we're part of VistaNote's Geopolitical and Market Intelligence business unit. At FrontierView, we work as a trusted partner for over 300 multinationals, supporting senior executives such as VPs of region, CFOs, and strategy leads. Our focus is on powering strategic planning, market monitoring, and international growth. And for that, we have dedicated practices for North America, Latin America, Europe, Middle East, and Africa, Asia Pacific, global economics, and healthcare. We work with clients across the consumer goods, healthcare, B2B, and technology sectors. And today we have a very interesting discussion around the outlook for Europe, Middle East, and Africa with our Managing Director for Europe, Middle East, and Africa Research, Zeynep Kosereisoglu, who is kindly joining us shortly following a client executive roundtable for heads of this region, of the EMEA region, where they were discussing some of their strategies for next year, some of their concerns and questions, and really preparing for the annual planning process, which is in full swing. So we thought it would be helpful to reflect both on what we expect from the external environment for the region going into planning for next year, and also some of the feedback, questions, concerns we're hearing from executives as they're building their plans for the region for 2024. So Zeynep, thank you for joining us and welcome to GlobalView.
Great to be here.
Wonderful. So first question, we talk a lot about uncertainty, even though we're probably in our first normal post-pandemic year. Nothing feels normal anymore. Could you tell us a little bit about the areas where heads of EMEA are perhaps feeling least confident, or maybe they feel there's the biggest uncertainty as they build plans for 2024?
Of course, the world still remains complex after our COVID years. There are, I guess, two main sources of uncertainty for multinationals during their planning period right now. One is the outlook for global inflation and the whole host of implications it has on cost assumptions, but also on pricing strategies. And the second is around political risk. And both of them are really requiring them to use as much scenario building as possible and really align on the back-end assumptions of a lot of their plans. I'll give us a quick view on the inflation side. It seems that multinational companies are experiencing the back-end drivers of inflation starting to ease. The shock of 2022 on the back-end drivers were easing, but now they're under challenge of how to forecast the retail prices for consumers, how to relook at their contractual engagements with different businesses, how to look at their kind of tender situations with governments. There is, it seems, more pushback from all kinds of customer segments against price increases. Even though headline inflation is easing, the kind of customer reaction is maybe even stronger to even smaller price increases they might be evaluating. So the outlook for inflation there looks very, very interesting for them. Plus now we are talking about some volatility in oil prices. We are talking about risk on food prices. So they're also uncertain about how even the back-end drivers of inflation could unfold into next year. The other element of that I just mentioned was political risk. I guess we've already had some foreseeable political moments we needed to be watching. There's elections coming in UK, Spain, Turkey, local elections, South Africa. These are very important elections that would create changes in potential policy for these countries. We also have a lot of EMEA executives really still trying to understand what are the immediate risks on US-China tensions versus what are some of the longer term risks on that front as well. So what does that mean from a supply chain perspective, but also quota allocations for products from not only in terms of Chinese demand, but also in terms of potential trade disruptions. So still that back-end thinking of longer term risks to manage on that front are very much top of mind. And then unfortunately, of course, we have seen instability increase in the Middle East over the weekend. This is an added source of risk for the EMEA executives. The Hamas-Israel conflict has really emerged in a surprising timing and also the surprising scale over the past weekend. And we basically are seeing high spillover risk towards West Bank, of course, within Palestine, medium spillover risk to Lebanon, Syria, Iran, and relatively lower spillover risk for Jordan and Iraq and the rest of the region. Egypt is, of course, under a lot of pressure right now as well from a spillover perspective, and the humanitarian toll is devastating. But as FrontierView, from an economic analysis perspective, of course, companies will need to be really looking at their targets for Israel. It is an important market and portfolio for EMEA. They will be rethinking service sector consumption, industrial production, government spending related assumptions for 2024. So
understood. And Zeynep, I think in that discussion also amongst some of the challenges that executives are facing, so you talked about inflation, political risk, there was also the question of Europe. Europe as a challenge. Can you just elaborate a little bit more on that and maybe the thinking about it? Because of course within EMEA, it is the biggest region, the biggest driver of demand, core market for many multinationals, but very tough. Anything you can share from those discussions with clients?
of course, it's definitely interesting to see Europe side of the portfolio creating more problems for companies going into 2024. From an expectations, targets, growth perspective, the Europe region has been not satisfying expectations, not really supporting the overall growth mandate that companies have in EMEA. We see the larger markets, definitely, if you look at the UK, Germany, France, their growth numbers are quite moderate when you compare them to emerging EMEA, but also the rest of the world average at this point, where we are seeing around 3% growth. And still, we do see that big chunk of the business relying on this geography. But I think we've heard from our executives, they're not looking at this region to grow, to be the major engine of growth, at least for their portfolio next year. That is leading them to look for other areas of growth into the emerging part of the portfolio. I think still within Europe, we have CEE, a big focus. We also have CIS markets, Kazakhstan and other markets still now increasing as a focus. Already they were relatively good performing markets, but now competition is even more intense there as, of course, the portfolio relies increasingly there to boost growth.
Mm-hmm. And I guess then are a lot of the opportunities then to be found in the Middle East and in the Africa, in SSA, because Nigeria is not looking so great. South Africa is a very tough environment. Where is the growth coming from, I guess?
I wish the story was simple to say, let's look at the EMEA side of the geography to find easier growth opportunities. There are definitely growth spots in Middle East Africa. So much focus is on Saudi Arabia and the UAE right now, not only from EMEA leveled executives, but even heads of international, where they are looking at probably in the world, India, maybe some markets in APAC, a few small kind of list of markets in LATAM, but also GCC as an important engine of growth for the global commercial performance. So there's a lot of expectations on South UAE, a lot of interest, a lot of competition rising because of that. But of course, on the ground, the realities are a lot more complex. There are opportunities there for sure, increasing spending across all segments of customers, but a lot of regulatory challenges, a lot of inflationary challenges there as well. So margin, or let's say profitable growth that is easy to attain, is also not the case for GCC. Focus is there, but we have to set realistic targets. And then you mentioned some of the challenging countries. Of course, some of the larger countries, Turkey, South Africa, Egypt, Nigeria, these are supposed to be good markets that provide that support to the EMEA portfolio. They're all struggling under macro pressures. We are anticipating impending devaluations in Egypt that will have to be taken into consideration. We are also seeing uncertain economic policy until March 24 elections in Turkey. We are seeing these structural issues really weighing on growth. You see in the chart here for South Africa, the elections will be critical in either further, unfortunately, dropping that growth, or at least giving some positive signs of, can we see slow improvements there? It's not even an immediate rebound to anticipate. Nigeria is an oil exporter, yet a lot of the FX challenges and high inflation due to imported refined oil, it's a complex market to really see as providing easy growth. So what we see companies looking at is even peripheral markets in this region. Iraq is coming up a lot, tier 2 sub-Saharan African markets coming up a lot, where companies are looking to find that next portfolio. Maybe not one country is going to make up the gap, but looking for a portfolio of additional markets to really increase commercial performance and potentially support the 24 budgets.
Understood. Well, it's a very complex environment, and heads of EMEA who always have a really tough job with balancing so many different countries are certainly in for a interesting and challenging next year, but with maybe some bright spots as well. And thank you for highlighting those, Zeynep. So that concludes our latest edition of GlobalView. We look forward to seeing you again next month. And many thanks to Zeynep for joining us today.